That's a no. You know what, Allison? We're going to start. If he ever figures it out, that'll be great.
Yeah, absolutely.
All right. So, do you mind introducing yourself? So, please, you and I met each other in Atlanta, I don't know, maybe 10 years ago. And I think from my perspective, what I loved about our relationship is that we both service our customers and our clients in a similar way. We saw a lot of similarities, and we also had similar clients. So it was kind of a natural, well, you do this for the client and I'll do that. Go ahead and introduce yourself. Tell us what it is that you do.
Yeah, absolutely. So my name's Alicyn McLeod. I'm a CPA. I'm also a certified financial planner. I'm the co-owner of Agate CPA. We're a uh, firm that is global reach. We have clients all over the country. We specialize working with law firms, entrepreneurs, and families. We offer accounting service, tax planning, tax prep, and wealth management.
Is this you, Allison?
Oh, that's totally us, Christian. Yes.
Yeah. So, Allison actually just recently did a basically a consult with me, going over, how I run my business and what returns, how we kind of set up our taxes. And you even gave me some great advice on, what you see some of my competitors do as far as, do you have a coach? Do you have any mentors within the industry? Do you have people that you can lean on and ask for advice? And I I think I initially said no, I don't have those things. And then the more I thought about it, I'm like, well, I do. I just don't call them that. I didn't put a formal title on it. Like my old bosses in Atlanta, I call them every 3 months. And we talk about strategy and what systems they're using and things like that. And it's incredibly valuable to me. I just didn't even think of them as a mentor. And then I talked to people like yourself. I had a wealth advisor the next morning that I was meeting with. Just you're not necessarily hiring each of these people, but you're using that intro to learn as much as you can from them. Mike, can you hear us yet? Oh, maybe he can't. Oh, Andrew's trying to help him. So he's just going to stare blankly into the camera in the meantime.
Oh, poor
So,
Mike. I feel bad for Mike when he joins.
so Allison, I hear a lot of my clients, they make this error almost all the time. Let's say they live in New York their whole life, and then they're moving down to Florida, and they want to make Florida their primary residence. And they say, well, I need a new CPA. And I try to correct them, and I say, well, you don't. And they're like, what are you talking about? So, well, Florida doesn't have an income tax. And so you mentioned this in your intro of, you have clients all around the country. What would your advice be to someone that is coming from out of town and moving into Florida? Who should they rely on, and what should they think about?
Yeah, absolutely. So we're very firm advocates of if it's not broke, don't fix it. So if you have whoever your advisors are, if you like them and they can follow you, probably virtually, but if they can follow you into your new home, your new state of residence, allow that. Your CPA or enrolled agent or whoever your tax advisor is, they can certainly do that. Your wealth advisor can certainly do that. Your accountant can do that. Your attorneys, depends on what
Yeah,
kind of
probably not.
and what they're doing for you. But for the most part, you probably will need like a new estate planning attorney.
Yep.
You have corporate counsel if you're a business owner. You'll probably need, well, actually it depends. You might or might not need new corporate counsel. Our own corporate counsel is in New York City. So it really just depends there. But yeah, it's very nice. You'll have a lot to do when you're moving. It would be nice to not change advisors if you don't have to. So I recommend that.
Yeah, I think that makes a lot of sense. So I wanted to make sure we talked about clients, but that we also talked about realtors and how they might run their business. How familiar are you with the realtor and their business? And do you have any kind of general advice you might start with in talking to them personally?
Yeah, absolutely, Christian. Are you thinking of someone who's sort of new or someone who's
Ooh,
been
good
in the business?
question. Yeah, let's start with new. Let's start with someone who doesn't know if their business is going to be successful or not. and they just want to set it up as simply and easily as possible.
Okay. And one more question. I assume you mean residential real estate, not commercial.
Ooh, I wonder if there's a difference to your answer. There obviously is, but let's start with residential because that's the majority of my customers.
Okay, yes. So you're getting into residential real estate. Um, Lots of people do that. I think it's a really fun, fast-moving. If you're a people person, like it can just be like just a great career. It's also highly competitive.
Yeah.
Um, it's ups and downs with market swings, economic swings. So it can be there's highs and lows, right?
Yeah, it's not without risk.
Yeah, yeah. Obviously my area of expertise is tax accounting and wealth management, so I'll speak to those sides.
Okay.
Tax, please do as simple of a tax structure as you can possibly do. Make sure you talk to somebody who knows about setting up tax structures. That might be your CPA, your enrolled agent. It might be your corporate attorney if you have one. It might be a really good friend who's done this a long time and does actually have some good tax knowledge to share with you. Um, don't believe everything you see on social media that says you need this or that, you need an S corp or you need this or whatever. You may or may not. Actually take the time. If you spend more time on the front end getting your tax structure right, you may find that something very simple suits you quite well, especially if you don't know how long you're going to want to do this. Don't get into something you can't easily get out of.
So
Um,
would the simplest tax structure simply be run everything through your name personally? Would that be the simplest?
yeah,
Okay, so in that scenario, you do a closing, you earn a commission in your personal name, and you get a 1099 from your broker, or you have your settlement statement and you file as part of, as your income, right? That's simple.
it's
Can
very
you can you do like can you take expenses off of something like that? Like if you're a realtor, you get that income personally, but you bought a new laptop. Is that a deductible expense or no?
a good question. I think there's misconceptions that you need some sort of tax structure to be able
Right.
to deduct business expenses. And while that can occasionally have an impact, most of the time, no, it doesn't. So if you are receiving income in your name personally for your real estate activities, that's what's called a sole proprietorship.
Okay.
Very simple. There's an extra form that goes with your personal tax return called a Schedule C. You report your revenue there. Might or might not be exactly what's reported on that 1099 from the broker, but probably close to it. And then you report your expenses there as well. So even if you don't have a formal legal entity or tax entity for your business, you absolutely will be able to deduct. Yep, that's it
So you
exactly.
have, yes, you have income and you have expenses, advertising, car and truck expenses, commissions, contact labor. So you'd have your income above and you'd have your expenses below, and you may not be able to take all expenses. There might be some limitations to this, but that's pretty simple.
I think conceptually it's very simple. Now tax rules are
Conceptually.
complicated from there, but just to understand the basics of, I earned a commission and it cost me money to earn that commission, right? And I'm not talking about my personal life here, but it cost me running around town all day. It cost maybe I had to pay someone else a commission as part of this. Maybe I had to do some marketing, right? Like whatever you spend to close that sale is on the table to consider as a tax deduction.
Now, you mentioned something. You said social media. You actually mentioned don't believe everything you read on social media. I see that all the time because, like you, I get calls and they say, well, I want to set it up. I want to put my property in an LLC, or I want an S corp because I need this or that. And I wish I could just do it for them, but I don't. I make sure that I talk to them and I ask, well, why are you doing it? And 9 times out of 10, they say, well, I read about online that that you should always put it in an LLC. So are there Are there misconceptions like the known things that you get all the time? For me, it's putting it into an LLC because that's what, the internet told me to do when it's a rental property. That's how I get limited liability. Sometimes that's not totally inappropriate for this particular customer, even if it might be good advice for someone else. Is there something that your go-to that people are always asking you about?
I would say that one is a big one. Like I need an LLC to deduct my business expenses. You
Yeah,
may,
that's gotta be a big one.
yeah, I see that all the time. The question, so LLC just stands for limited liability company. These are creatures of state law. And you go to your Secretary of State and say, I want to apply for an LLC for whatever. It's very easy to do. It's super, super easy to go to a website and pay $100 fee and bam,
Yeah.
you have an LLC. The problem is you've never taken the time to actually understand what that is, what requirements are to maintain it, operate it, what benefits it has, and honestly, what benefits it doesn't have. Right. So social media will tell you get your LLC. I honestly, Christian, we are at the point where when people start a new business, it feels like they have stopped saying, I started a new business, and they say, I started a new LLC, as if somehow an LLC is the business itself when it's really just a structure. So I think there's so much misconceptions around those three letters. No one even knows what it is or
Right.
history or anything. So I would say that's one of the biggest ones.
Well, and I
Um,
even saw on YouTube recently, I'm pretty sure the words are stop working for someone else and start your LLC today. I'm
it's
like, oh, I wish it was that easy.
when you hear that, just know it's a scam.
Yeah, they're just trying to sell you their $250 LLC package or
Yeah,
more.
right. So it's very much, I mean, there could be different types of scams going on there, but it could be one like you need to come to us to establish this thing that one you can establish for yourself without help
Yeah.
on the
Yeah.
secretary
So here's
website.
for Florida and Georgia where you are, it's actually the exact same. It's an online filing. You put in a name, you have an address, a registered agent, how many managers or members, and you pay the $135 fee. A week later, it's done. Yeah, it's very simple. I do it for customers that want me to do it, but it's not a huge upcharge because this is actually pretty straightforward.
Yeah, there's no need to pay somebody to help you do that. What you pay for is the advice to help you know if you should do that. And that's I think what gets missed, right? Because we pay attention to the shiny object anymore and the people who are promoting their scams need to have pretty marketing.
Yeah.
But people like you and me who get paid to advise people, our marketing doesn't look so flashy because we're not selling you a product. We're just here to help you.
Yeah.
That,
Yeah,
that
there's Allison, did you ever read the author Chris Voss? Have you ever heard of him?
marketing, so
So he wrote a book called Never Split the Difference. He's a former FBI hostage negotiator. And he makes a very unique pitch. He says, when people call, he gives an example. It's a real life example. He was the international hostage negotiator for the FBI. And so he had a US citizen who was kidnapped in Haiti. And he's in Washington, D.C. So he calls this person's sibling or father or something, calls the father and says, hello, I'm Chris Voss, the international hostage negotiator for the FBI. I'm here to help. And the father says, who are you? How can you help me? You're in Washington, D.C. It's a great question. And he said, I had two ways I could have responded. One, I could have said, basically list my bona fides. I've been doing this for 30 years. I'm the lead hostage negotiator for the FBI worldwide. I have this, I have that, I have this accolation. I was in the Army for 5 years, whatever it may be. He goes, I skipped that. And I just started giving him advice. Here's what you need to do now. Dun, 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 dun. And he's like, and the guy could either believe him or not. There was no funny business. There was no marketing plan. It was just take my advice or don't, but here's the solutions. Here's what they are. You can either believe me or don't. And Alicyn, you and I are on the same page. I don't have glitzy marketing, just like giving good advice. And if I create value for my customer, they'll keep coming back. Makes sense. It's a great book, though. It's called Never Split the Difference. Really fun book.
Oh, cool.
Highly recommend it. So yeah, social media, scams, I think you just have to be recognizing that they're out there and that advice could be good advice, but maybe not for you. And the context is very important. You mentioned another thing. It's very easy to set this stuff up. I don't know if uh, you went as far as what I'll say is it's very easy to set up and very easy for us to mess it all up.
Absolutely. Absolutely.
So
We
how could a realtor, let's say the realtor does the very simple tax planning, what would the next step be? So now we're a little bit more established. We've kind of maximized our ability to, manage it individually. Maybe I'm talking to an attorney who says, well, we need to put this into some sort of liability structure so that you can kind of get a little bit of the liability protection, but also maybe maximize your tax benefits. What would the next step be?
Okay, so let's say you're an agent and you've gone to your attorney and they are recommending something. There's a few recommendations they might have, but really it's probably going to come down to two. One will be a limited liability company,
Okay.
and the other will be a corporation. And they each allow different tax structures to be
And would
sort
you
of.
say your advice would probably depend on specific circumstances, but also the most recent tax code? Because that's going to change every year.
Yeah, this is hard.
Call me out, Alicyn. If I'm wrong, just say it. I love it. Give it to
Well,
me.
this is really hard. Sometimes tax rules change and sometimes they don't. And sometimes they're, I would call them volatile in the last 10, 20 years. They're very, at the federal level, very unpredictable.
Okay.
Congress will meet and do nothing. Congress will meet and totally uproot the current tax regime. So I think skating to that puck is super hard anymore. I don't recommend too much of it.
Yeah,
Um,
so you don't recommend changing every couple of years you just kind of do the best and stick to it until it's obvious you need to change.
I would say so. I would say so. And it's also that there are some tax structures and entities that are easy to get into, not easy to exit out of.
Okay. Okay.
So start with a tax structure and a legal structure that is flexible and open, and it will allow you to grow. And if you decide, I don't want to do this anymore, it's really easy to unwind. If you blow it up and you've got this big team and you've got ancillary businesses and you've got things going on, a structure that will allow you to maximize your legal simplicity, because legal and tax simplicity, really, because sometimes what we'll see is folks have a different legal entity for every single little thing they do, whether they need to or not, or vice versa. They'll fail to segregate different
Yeah.
types of businesses into different entities. um, but that's probably much further down the road for most folks, I would think. But it is something to be thinking about on the front end. Kind of begin with the end in mind, as they say, to think about what you have. Can it move with you, change with you? Is it pretty simple to do that?
Yeah, that makes a lot of sense. All right. So what are the fun tax things that you get into that you really think can make a difference for let's say it's an individual or maybe it's a client of ours that's going through something, they're buying houses or they're selling a house, or what are the things that kind of jump to mind that like you think everyone should know, whether and double check. And I'll give everyone a heads up. I'm totally blindsiding Alicyn on these questions. I'm just making them up as I go. So it's not like this is prepared at all. So I apologize, Alicyn. I'm having fun with this. I'm just going to go with it.
These are questions. So let's keep going with the assumption we're talking about real estate. I
Okay.
like that. I like this theme.
Yeah, that's the theme.
Real estate is a really unique industry and place to make money. Uh, the reason is because of third party debt. It's very difficult to start a business with no money. It's relatively easy to go buy a building with no money. And so you see a lot of folks enter into the real estate market in various ways with various levels of business know how, various levels of connections. When we first started chatting, Christian, you were talking about you have this sort of advisory council of folks that help you. A lot of folks don't have that when they're entering real estate transactions and activity. The other thing that makes real estate so fascinating is there's so many ways. I think there's countless ways to make money in real estate. You might start off selling residential real estate and then you decide you want to be a broker. And then you decide you want to help with titles. Then you decide you want to do rentals. Then you decide you want to do commercial rentals versus residential rentals versus, all kinds of residential. You want to flip. You want to be a developer. There's unlimited, seemingly unlimited ways to make money in real estate. So when you combine that with the ability to go get debt from third parties, whether it's a traditional mortgage or hard money or whatever that is, depending on what your activity is, you have very quickly an opportunity to have really complicated financial, accounting, tax situations. And so I don't know there's much you can do about this, but I would point this out that when you're playing at real estate and you're just getting started, you might have your hand in a lot of cookie jars, but you might not have a lot of cash flow. You might not have a lot of profit. These might be things where you buy and hold, or you're waiting to lease up, or whatever it is. But you still have a complex legal, tax, financial situation that requires like a bare minimum of professional advice and assistance and help to help you run. And so I see a lot of folks get in these cash crunches and they don't necessarily they haven't budgeted right to have all the help that they need to have. And it comes back to bite them soon, or it comes back to bite them later. So I don't really have a clear answer for that or a quick
That's good.
solve. Be alert to that. It's not, that situation is not unique to real estate, but it's going to pretty much always happen just because of that combination of how you can make money and third party debt. And anyway.
Yeah, so let's look at some examples in that realm because it makes sense to me because I deal with it on the back end and I know you do too. You have someone that buys something or starts doing something, and then when it comes to actually profiting off of it, usually it's a decision to say I'm going to sell or I'm going to refinance or whatever it may be. Now that there's profit there, all the decisions they made leading up to that point come to a head. And you're looking at depreciation, you're looking at, did they report rental income on their returns? Are they foreigners or are they US citizens? Like all these decisions, all these things that came up, now they have to deal with it. And your answer is so wildly different based on the circumstances. So what I see a lot of times is a foreign owner who now is selling and they're trying to limit their taxes because it's now punching them in the face. And it's almost like, oh gosh, woulda, coulda, shoulda. I could see that. It makes sense. There was no profit up until that point. It didn't seem like it made sense to hire people to advise you on this stuff until it's a little too late and now there's too much income or you've made something now it's going to be hard to hide it.
Yeah. We think about getting help on the sales side.
Yeah.
It's another context other than real estate too, but we often don't think about getting help on the buy side.
Makes sense. It makes sense. All right, so I've got a couple questions for you, some from the crowd.
Yes.
All right, so one of the questions, do you recommend a percentage of each commission check a person should set aside for an IRA or a 401k?
No.
Ooh, really? Okay.
I don't, because that's a rule of thumb. And
Ah, she says, wow. Yes, okay.
the problem is everybody's financial situation is different. Everybody's tax situation is different. Everybody has a different horizon to retirement. Everybody has different asset locations, meaning some people may have a huge IRA balance. Maybe they got into real estate because they semi-retired. They've got a $3-4 million IRA sitting around and they're bored and they want to get into real estate. And this is a fun thing and it's making some money and that's great. Like, am I going to tell that person, let's go sock away more money into an IRA? They have a huge, especially most of the dollars will probably come out needing taxes paid on them. So maybe their opportunity is more just take that and put it in a brokerage account. And I'm not trying to give anybody specific advice, but
Disclaimer.
Yeah, that's just an example. Or maybe, you have spouses, right? Your financial situation is somewhat married, whether you like it or not. Your tax situation is very married, whether you like it or not. And so one person might be doing this thing over here that by itself, I might give them this advice, but knowing their spouse's situation and their combined situation, the advice totally changes. So I don't have like a specific, I wish I just had all these rules of thumb, but this is kind of why you need help on all this, is because a lot of those rules of thumb will lead most people astray.
Yeah, it makes sense. I'll draw a comparison. Maybe it's a different type of issue, but it's the same way you look at it. Some people ask about whether they should pay off a mortgage faster than they're required to. And, you'll see on YouTube or elsewhere, they'll say, well, if you make one extra payment a year, it'll cut down your mortgage payoff from 30 years to 23, just because that's how the amortization works. And you're prepaying down the principal so your interest reduces and it has a ripple effect. It's great advice for one person, but I knew for myself personally, I was never going to make that one extra payment at the end of the year. The money's already in my pocket. I can't write another $3,000 check. No way. Mentally, I couldn't do that. So in my case, I did do the 10% extra every month because that was more palatable for me. So the person who's asking, maybe it's more palatable because it's a forced saving technique. They've already decided on the front end that they want to do this, and now they're implementing how to do it. So maybe, but it is two steps. It's, do you need to do or should you do it? And then if the answer is yes, then how are we going to do it? Are we going to allocate a certain percentage so that I'm just automatic? That can be pretty valuable. Totally depends.
It does, and I think kind of we're circling back to the earlier discussion about flashy marketing. The should you do this, that's an advisor. That's a relationship, that's a higher fee, that's more friction. But this rule of thumb about, you should make 13 mortgage payments in a year.
Yeah.
That's marketing. I can sell that all day long. I can use that as a lead to
That's
sell.
good stuff. That's going to be on the top of this YouTube show.
Exactly. You can package that so many ways. But should you do that? It's like that's not an easy conversation. It requires an analysis. It's how you feel about things. And, do most people have time for all that? It's easier to sell a rule of thumb.
I'm going to show you this one. I thought was funny. I got this email yesterday. We also share your passion for giving back. As part of our initiatives, we adopt a whale for every new client.
Interesting.
I thought it was really cool. It got my attention, but yeah, that's an example of flashy marketing, maybe. Get my attention. Maybe it worked. I don't know. You want a whale, Alicyn?
I care about the whales.
Yeah, I do too. Yeah, of course. All right. Depreciation. All right. So this is, if anyone owns real estate, we're going to talk about real estate specifically. On a primary home, can you depreciate the house at all on your tax return to get some sort of deduction? Let's say in the most simple of ways, could a husband and wife who have one house and they live there full time, would they even consider depreciating something? Is that something they can do?
No.
Yeah. No. Now, if you want to get super sophisticated with it and it's a rental, so rentals have depreciation, correct?
Absolutely, they do.
Residential has a certain depreciation timeline and commercial has a different one. What is it? 27 and a half for commercial and is it 39 for residential?
The other way around.
Exactly. Perfect.
Yeah.
So I heard recently, so basically, for the reason why a lot of people like real estate, you mentioned debt. So you can borrow the majority of the purchase price from a third party. And so you have a lot less money down. But if the value of the property goes up, your investment has a chance to exponentially grow because you're borrowing so much. There are downsides. You're taking some foreclosure risk if you don't pay back the mortgage. If you can't afford it, you better hope the bottom doesn't fall out. But you can throw in depreciation and you have rental income. Is it possible that if you buy a rental property, you're not going to pay any taxes on that rent? Is that possible? Yeah.
Yeah.
So you have $100 of income and the tax code allows you to depreciate it by $100. They're a wash and you're not going to have any taxable income, but it's still income. You still have money in your pocket, hopefully.
Cash flow.
What is a cost segregation study? What is a cost seg study? Because what I heard and what I'm trying to figure out is you have a rental property and you're trying to supercharge the depreciation so that it's not on 27 and a half years, but you can take out appliances and other structures that might have a 7-year time frame or a 3-year time frame. Is that a valid business model? What if you have too much depreciation and it doesn't?
Hmm.
So it's a
Yeah.
lot, right? That's crazy.
Yeah, so I feel like this is another area that's overhyped. It has flashy marketing. Yes, you can. The cost segregation study is an engineering study, basically, and it takes all the components of a building and it pulls them apart into assets that have shorter depreciation lives. So rather than like maybe a commercial building is a better example, but maybe instead of the entire commercial building being appreciated over 39 years, you pull out, fixtures, pieces, other pieces,
Office
components.
equipment, maybe.
Yeah, if you buy it furnished, it could be maybe the roof, different pieces of it you can pull out and say, well, that does not depreciate over 39 years for the tax code. That's depreciated over 15 years or something like that. And then some of those shorter lives then qualify for an accelerated depreciation where you can take a large percentage of that as a deduction in the year of purchase. So it could be, used to be 100%. It's kind of decreased over the last couple of years per how the tax code works. There's some push to maybe put it back up at 100 again. But there's definitely some catches. The IRS has caught on that everybody likes to do these. And so these are starting to get a little bit more IRS scrutiny. Two, not just everybody can do this. You can't just, I personally cannot just go buy a commercial warehouse tomorrow and do this and have some kind of benefit. I can do the cost segregation study, but being able to deduct that much accelerated depreciation on my tax return won't work because I'm not what's called a real estate professional. And real estate professional does not mean what you and I think it means or what the greater real estate community thinks it means. It is like a very specific tax rules.
Okay.
And so you really have to make sure, and you really need to talk with somebody who can walk you through those, but you need to make sure that you would qualify for that in the first place. And I think a lot of people who don't qualify for that try to take a full deduction, accelerated deduction on their tax return, hence the increased IRS scrutiny. If you qualify and you've done everything right, and this is what you want to do, great. But if you don't, you should really walk away. The other problem is going back to the debt. So you've taken a whole bunch of deductions all at once, but you got to keep paying off that building. So you
I
have this,
do?
yeah,
Oh,
yeah. So you have sort of a mismatch between the tax benefit and the loan payoff, which again, that may be fine. You may have planned for it. It may be great. But it's just really something to be careful of. Really, with any tax strategy, you always want to ask what happens in year 2.
I
What
like
happens
that.
in year 3? And what happens at the end? So I want to know the first year I do this, what does it look like? But then what does it look like from a tax perspective, a cash flow perspective, a debt perspective, et cetera, over the life of this strategy? And that strategy really doesn't end until probably you give up the property, and maybe not even then if you want to do something like a 1031 exchange. So this may be like part of a larger real estate portfolio strategy too.
Wow. I think that's good advice. It's not just what happens now, but what about in year two? What about year three? And what about at the end? That I think that's awesome advice. I love that. All right. I have another question for you. I hear this all the time. Um, they're working with their CPA. They're trying to keep their taxes as low as possible, and so they take as many deductions as they can. Maybe they don't. Maybe they even go beyond that. Maybe they're kind of, evading taxes, and then they want to buy a house. And so
Yeah.
now the lender is going to look at those tax returns and say, "You told me you were making 100,000 a year. This says you're making zero." All right. Do you have advice in that case? How aggressive should someone be? Because again, it's not just what happens now, but what happens in year two. Have you seen that?
I think with our client base, we really don't see much of that. Folks are taking advantage of all their tax deductions and stopping there. But yeah, absolutely. So I guess a couple things there. Keep it legal.
Keep it
Don't.
legal. Do not evade taxes.
Yeah. Two, talk to your lender in advance. Establish that relationship in advance. Ask them what their underwriting is going to be looking at. There may be things that their underwriter adds back. Again, an accelerated depreciation. You can explain this was a one-time tax move, not an impact to my income going forward,
Yeah.
right?
Yeah.
So there may be things, it depends on how sophisticated and concerned and interested the underwriter and the lender are. So, but I would say where I've seen folks be successful is having that relationship in advance so they can have an idea of what's coming, and not just with real estate strategies, but certainly in that area too. And third, it may just be this is how it is, and this is gonna have an impact on how you shop around for lenders, and how you establish that relationship if you haven't established that relationship on the front end.
Yeah, what we see a lot of times, conventional lenders, they have to fit you into their box. They have this particular product, they have a lot of rules and regulations. If you don't fit in that box, they're not going to be the right fit for you. And so recognizing that on the front end is incredibly important, because you could just be wasting your time trying to be defined by that box, whereas you might have to just go a different direction. It's interesting.
It's
All right.
tough, and appetites change. You might have a great lender and they change mortgage companies, banks, whatever,
Yeah.
and that new bank doesn't have an appetite for what you're doing, or doesn't right now, or it's risky getting a loan, right, at any point. So you
Yeah.
have some risk there. But I think it is increased somewhat if you're trying to accelerate deductions, and absolutely don't cheat on your taxes. Just don't.
Don't cheat on your taxes. All right. So, what would happen if I try to cheat on my taxes? No, I don't want to do that. All right. We're buying a house,
All right.
and there's some furniture that I'm buying with it. And a lot of times, sellers and buyers will get together and say, "Hey, look, let's separate the furniture, and that will reduce my taxes to the IRS. It'll reduce your property taxes to the purchaser. It will reduce the fees." What are the things you have to look out for in that realm?
Oh, that's interesting. I could see how that could adjust your property taxes.
And
Because
I'll put a disclaimer. It doesn't usually help as much as people think, because the county is already only looking at maybe 90% of what you paid anyways. So, and they're going to look at all the neighbors. It might help, but I wouldn't bet on it.
I would say the same on the income side. I mean, it might not be reflected in your purchase price, for example, but you paid out of pocket for it somehow, right?
Yeah.
Everything ends up getting reflected in the sales price, like it just does. And so then that sales price becomes your basis. I don't know. I don't see
I
that
was
really.
always worried that you've got basis in the house that, and that's pretty obvious, but you also have basis in that furniture. And where I always worry is if you're inflating the value of that furniture, and this is where Alicyn, you and I are on the same page, don't lie about your taxes. So if you're inflating the value of the furniture, let's say it's worth 100,000 and you're putting it for 200,000. So it's over, you're over collecting. Well, there's no way you paid 200 for the furniture. Or maybe there is, but there could be a taxable income on accepting 200,000. It may not be treated as fairly as the real property was. I just think it's so much work for nominal, if no benefit, and you're putting yourself in risk possibly.
I think again to your point, and this is our theme for this conversation, Christian, is people hear about these strategies that everybody does, then they go do them, and honestly, it's oftentimes difficult, sometimes impossible to know what your ROI really was. So there's just this assumption that it works because no one really goes to calculate it. They just feel like they got one over on the man
Yeah.
because they did
Yeah.
the thing that their buddy said to do or TikTok said to do or whatever. So yeah, most honestly, that just our firm's approach is straightforward solutions, right? And that's where the value is.
Yeah, you have to have some strength that you're not missing something, and we see this in the market in general when things are just really hot and you feel like you're missing out and everyone around you is making a fortune. I don't believe that there's a magic pill. There's no cheat code in life. I think you just have to do the best you can, rely on the advice of others, and and be happy with what you have, and strive for the best. But where you cross the line and maybe do something that's not legal, you're just stepping backwards. You're not making strides forward. It's really dangerous. It's an easier way to live. It's an easier way to sleep at night too, but it's
Yeah,
tough.
yeah. I find sometimes folks will go through more hoops to avoid taxes, then it's just not worth it. The ROI again is just not there. Like just pay the tax and move on. But we hear about these strategies like a 1031 exchange or cost segregation study, and we think, well, everybody else is doing it, but we don't necessarily know again like what that strategy looks like over the lifetime of the
Yeah.
strategy. I
Yeah.
think what I see over and over and have seen over and over, and I'm sure will continue, is people get themselves into strategies and structures because of poor reasons and usually regretful because it's just such an administrative burden, and usually will incur ongoing professional fees that are otherwise unneeded.
Yes, in my short career, I've seen the land tax credits where people put it into conservation and then get these big tax credits. We saw a
Yeah.
huge boom of that and then found out after the fact that they were overinflating the value of the land so that they could capture more tax credits. And the IRS, once they caught on to it, I mean, people were being nailed to the wall. But for 10 years, people were getting away with it. And when it came ugly, if you read that in the Wall Street Journal, it scared you. Like, oh my gosh, that was me. I did that. That was tough. It was tough to ignore it because it's in the tax code, but where people go wrong is they were praising these things high. There was some bias or conflict there. And then we saw it more recently when COVID hit and they did all these, incentives to business owners. I can't remember what it was called, but it was like if you were shut down, you probably know, Alicyn, but you're shut down during COVID due to some sort of local restriction and you kept people on anyways, you could get a $26,000 credit towards each employee. And I had people in my sphere that were looking at this and they're like, you need to look at it too. You never shut down. Or you, well, that was the answer is I never shut down, so I couldn't do it. But that's not what the tax professionals were telling them. These people were selling the idea that, oh, no, 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 you can get it, you qualify, and then they would get a $100,000 tax credit. And now we're finding out, we saw it in Wall Street Journal last year, there were multiple reviews on this, and they're like, hey, this is not good. And I believe the IRS even came out and said, hey, if you pay the money back, we'll let you off the hook.
Mhm.
So it's tough. I mean, with social media, with the internet, and just natural human instinct, you don't want to ever be, not looking at this stuff. It's gonna be in front of you. You just have to be strong enough to know or say no, thank you after you do your analysis.
It's really hard though. It's really hard to
Really
have
hard.
all that marketing pushed at you and then say no. Like,
It's not worth it. Yeah.
it's much easier to say, okay, this person says I can. That sounds much better than somebody over here that says I can't.
Yeah.
And yeah,
Yeah. It's tough. I'm curious to see what the next round will be. It'll be something.
I am not curious at all, Christian.
Not curious at all. We'll leave it on that. Alicyn, thank you. How do people reach out to you, Alicyn?
Oh, yeah. A great way to reach us is our website, agatecpa.com, AGATE, CPA.com.
Yeah, I just Googled it and I put in Agate CPA. Um, Here's my pitch to everybody. Have someone that you trust and that you get along with, that you see eye to eye, and that have similar clients to you. Because it's really hard for someone to learn a whole new industry or a whole new business or a whole new type of person for that one person. But if they have 500 other customers that are just like you, that's someone that could be a really big value to you. And you don't necessarily need someone that's in Florida. You need someone that will answer your call.
Yeah,
That's really important.
that absolutely is.
Alicyn, thank you. Good luck. Stay warm and don't slip on any ice.
Will not. Thank you so much, Christian.
Bye, guys.